very warm welcome to all of you. And uh, you know, things keep changing. You everybody wants to make money in the stock market, and the when we read a book called 100:1, and based on this, we did the wealth strategy. But the sum total of the book was in this slide. Now, what it takes to make money in the market. Stock market is all about the futures. I mean, you buy the futures of the company. I mean, with a dream that this company will go like another Infosys. Incidentally, Infosys is the ultimate growth story in India, which did about 6,000 times ex-dividend. So if you include the dividends, maybe it is 10,000 times since the listing. The company got listed at about 31.5 crores. They issued the shares at 31.5 crores. They got listed at 50 crores, and today the stock is closer to 3 lakh crores with 30,000 crores in the bank account, 12,000 crores annual profits, and 6,000 crores annual dividends. So this is what is the power of 31 crores value of stocks of all the Infosys company in 93. So clearly somebody, I mean, I'm sure there must be guys, mainly the promoters and some more investors who must have had the vision to see the next 20, 30, 40 years of what is going to happen in Infosys, and they had the courage. I mean, the stock moved very quickly, because one of the biggest problems in the markets are that when the stock moves very quickly, people get scared. They can't count their money, and they end up selling. And so that's the one thing, that people have a lot of courage to buy, but they don't have patience to hold. So you need vision to see, you need courage to hold, courage to buy, and third, patience to hold. And it is found, I mean, the rarest of the three is the patience. What is investing? Investing is foregoing current consumption to be able to consume more in the future. If you part with 1 lakh rupees, or if you part with 1 crore rupees, you should be able to excuse me, you want to sit here? Come. Okay, sorry. So investing is increasing the consumption power of your current savings. So if you have 1 crore, how you can buy 5 crores, 10 crores worth of stuff 10 years out into the future? Because the power of investing is to be able to enhance the purchasing power of your savings. And what happens is that the economy is very inflationary. So your money which is there today is getting corroded at the rate of 7-8%. That is inflation year after year. So this is the history of inflation. For last 34-35 years, the industry the country has faced inflation of about 8.5%, and inflation is post-tax. So you need to earn about 11-12% pre-tax to beat the inflation, and there is no fixed income system which gives you 11-12% across your portfolio post-tax, pre-tax even, or post-tax 8.5%. So what happens is that biggest challenge for an Indian saver, how does he preserve? First is preserving the capital and then making some money on top of it. Because if you make 8% post-tax, you'll barely preserve. And we have only long series of SBI, 3 years rolling fixed deposit rates. That is about 8.5% for last 34 years. So basically, if you had deposited all the money in 1979 in the fixed deposits, in that case, it would have been about the same price. 100 would have remained 104 inflation, adjusted for the inflation. If you are lucky to buy some gold, it would have doubled. But if you had bought stocks without dividend, ex-dividend, it would be about more like 15-16 times. If you include the dividend, it would be more like 25-30 times. So the one place where you can comfortably make money, comfortably I am saying, not with much of stress. If you go and buy just the ETF, just the Sensex or Nifty ETF, where cost is very low and you're not taking any manager risk, still you'll make 15-17%. Definitely better than a fixed income instrument. So, making money, making about 14-15% in the market is far more simpler than what it is made out to be. But making 20-25% is far more difficult than one thinks it is. So CNBC and all, they try to make it very easy for you to multiply money day after day, but you know how many people they multiply their money. So, making money at a faster pace of upwards of 20% is very, very difficult, seriously difficult.